pulled up your numbers, Danny. Thanks for running that all the time, by the way. If you're cool with it, let's check this out. But market at a glance, a couple things really jump out at me. Number one, way higher inventory than we've had for a while. So that's positive. As far as balancing goes, that's positive. As far as selling goes, way higher average sale price on the market. And as far as buying goes, way lower 30-year mortgage rate, negative 78 basis points. So that's a big deal. That goes a long way towards balancing the market. But I'll let you get into the details, Danny, with our sales volume first.
Yeah, so you can see here we're in the low point of the year. If you look back a year ago, that's where things bottomed out, and that's not a surprise. That happens typically in January. Obviously, we've got everything kind of shut down for the holidays, so you're really getting a cold start, no pun intended, coming right into the year. We were just 12 houses off the mark from last year, so that's a 1% decline, but a 34% decline month over month. But as you see, last year, things really started to climb back up from there. That's pretty much what we anticipate. And as you noted, the inventory, while it's down month over month by 10%, it's still up 13% compared to last year. And I think that's kind of what we've seen over these last several months is 15, 20, 25% more inventory, which is great for the buyers that are out there in the market at this moment.
Yeah, and 2.37 months of supply leads us more towards a balanced market. Now that metric, a balanced market is defined as 6 months of supply. We're kind of thinking, I went to a class this past week, we're kind of thinking that metric needs to be amended because we've been so far the other way for so long. I don't know if 6 months is going to be our new median level, but we're definitely creeping more towards a balanced market. So as far as average sales price versus average list price, this one's always the best indicator, I think, for how we're growing with our home prices. So then let's run through those real quick.
Yeah, this one's interesting. You can see that there's still a pretty good spread between the blue line, which is where things were listed, versus the orange line, which is where things actually sold, right? So the average list price was $412,000, almost $413,000. You see the average sold price was at $395,000. So definitely noticeable or notable that those two lines are pretty far apart. You can see the distance though is pretty similar to the last couple of months. One other big notable feature here, as usual, is compare that to where we were last year. That $395,000 average sold price for January this year compares to $374,000 last year. So we're still up year over year by 6%, which is pretty healthy. And the other thing that I think is interesting is you see last year in January, we were still kind of on a downward trend as things came out of the summer, which is always the peak period of time. And they kind of dipped to a low in January. And that's not the case here. It looks like we kind of bounced off of December coming into this year. So that'll be a watch item for us is just what's going to happen from there.
Yeah, and every homeowner, this is, I think, their most interesting chart. How did my house do overall year over year? That's assuming you're not selling right away. Obviously, every case is different, but on average, you're still gaining equity, so that's positive. Next chart, percentage over and under asking. This is going to balance out as well. Danny, run us through those numbers.
Yeah, and this one, I mean, we don't spend a lot of time on it. Just directionally, you can see that little green slice at the very top of the page, if you can make it out at all, it's very small. That's the amount that went more than 5% above their asking price. The big orange section is anything that went more than 5% below the asking price. And everything else in the blue is just, that went within plus or minus 5%, right? Which is just kind of normal. And you can see how those play over the course of the year. You see that orange line really grows again in the cool season. The green section recedes. And that's where we are right now. If you scroll all the way back over to the left-hand side of the chart, you can see that this time last year was pretty much a carbon copy of where we are now. So no big surprises here. And what we'd anticipate is things to look like they did in February, March, and April of last year, right? Where we'll start to see that the green comes back, the orange regresses a bit, and things start to pick up.
Yeah, and then the next chart, days on the market. This is as expected for a balancing market. It's also a seasonal indicator. We expect this to come down a little bit, but I don't know how the balancing of the market's going to affect this. We're going to expect longer time on the market as we go. Danny, do you have anything to add to that?
Yeah, I mean, it's a good call. The pattern we've been saying now for the last year, as we've been looking at this every month, the pattern's the same. It's just out of phase by 4 or 5 days a month, each month compared to the year prior. And you see that here as well. I mean, it's up to a 7 day spread, both for the median and the average days on market compared to the same time last year. The fact that that's sustained over the course of the year is definitely a strong signal that there's something a little bit different about the way the market is behaving today versus how it was a year ago. And yeah, I suspect you're right. We're probably going to continue to see some longer times on market for the near future.
Okay, price reductions, a little bit ticking up again as expected. Again, part of a shifting market. We're going to continue to expect that number to creep up over this point last year, but will fall during its seasonal warm weather in our hot season. And then mortgage rates. This is the lowest we've seen in a few years. Very positive sign for buyers. Should result in a little more activity for sellers, which is good because we have a higher inventory as well. Dan, do you have anything to add?
No, I think you're right. I mean, the affordability has been such a big concern for everyone. So every little bit that mortgage rate can go down is a big help to buyers. And it helps to offset the fact, that we saw in that previous chart where the prices, despite all the craziness these last couple of years, have continued to just inch upward, right? So that also plays into affordability. So definitely a good call to action for anybody that is thinking about buying. This is one of those times of the year that is really great for buyers because, again, you've got a market that's just waking up. There's not a ton of competition yet, but we know that the pattern is every year that it only goes up from here. So if you've got a rate that's better than it's been in the last couple of years, you've got more inventory than we had last year, and you know that this is the low point for prices typically in this market at this time of year, I can't think of a better time to be a buyer.
Yeah, that's a great point. And we'll continue to watch that as we go. As always, Danny pulls these numbers. We pull them ourselves. We don't have things like Circleville and Athens in our numbers. But something I want to point out here, Grove City looks like it's consistently been a hot spot in our number of sales month after month. And I think that it's because that part of town strikes a good balance between amenities, school district, new construction, and proximity to the rest of the city and affordability. So Grove City has been on the top of that busy list for quite a while until something else emerges that strikes that same balance. I think it'll stay there for at least the foreseeable future. So thanks as always, Danny, for pulling the numbers. We will let you guys know if we have any exciting news like 5% interest rates or anything breaking. But other than that, we do this every month. Make sure to follow us, and we'll see you next month.